Good morning, everyone. Today, we will walk through a practical case study on Tunisian Personal Income Tax, or PIT, for the year 2025, prepared by instructor Dr. Abdelaziz Fourati. We will follow the situation of a taxpayer named Mr. Ahmed. Mr. Ahmed is a Tunisian resident with three distinct sources of income. He is an employee at a bank, runs a small clothing trading business, and works as a freelance consultant. He is married and has three dependent children. Sami is 22 years old, a university student with no income or scholarship. Lina is 16, a high school student. Youssef is 10 years old and has a disability. Mr. Ahmed also holds a life insurance contract with a duration of 15 years, and he paid an annual premium of 1,500 Tunisian dinars in 2025. These personal and financial details will matter when we calculate deductions. Now we move to step 1. Calculate the categorical net income. This means we will calculate the taxable income from each of his activities separately, following the rules for each category. First, salary income. Mr. Ahmed's gross annual salary is 45,000 TND. Social Security contributions, or CNSS, are withheld by the employer at a rate of 9.68%. That amounts to 4,356 TND. His net salary after CNSS is 40,644 TND. Next, we deduct professional expenses. The standard deduction is 10% of the net salary, which would be 4,064.4 TND. However, Tunisian tax law sets a maximum deductible amount of 2,000 TND for professional expenses. Therefore, we deduct only 2,000 TND. The net taxable salary is 40,644 minus 2,000, which equals 38,644 TND. Second, industrial and commercial profits from his individual clothing business. Mr. Ahmed keeps proper accounting books. His annual revenue is 80,000 TND, and total operating expenses are 65,000 TND. Under the actual regime, taxable commercial profit is revenue minus expenses, which is 80,000 minus 65,000, giving 15,000 TND. The case study also shows an alternative flat regime for revenues below 100,000 TND. Under that regime, the tax is calculated directly, 400 TND for the first 10,000 of revenue, plus 3% on the remaining 70,000, which is 2,100 TND, for a total categorical PIT of 2,500 TND.
Since his annual revenue is lower than 100k TND, Mr. Ahmed opted for the flat regime.
Third, non-commercial profits from his consulting activity. This is a secondary activity, and he does not maintain detailed accounting books. He opts for the lump sum regime, known as forfait d'assiette. His gross receipts, including all taxes, are 20,000 TND. Under this regime, taxable income is equal to 80% of gross receipts, meaning 20% is automatically deducted for expenses. So taxable non-commercial profit is 20,000 times 80%, which equals 16,000 TND.
Fourth, real estate income. Mr. Ahmed owns an apartment that he rents out. Monthly rent collected is 600 TND. He paid 200 TND in property tax for the year. The partial lump sum regime applies. We calculate as follows. Annual gross rent is 600 times 12, which equals 7,200 TND. We then subtract an allowance of 20% for charges and fees, which is 7,200 times 20%, or 1,440 TND. Then we subtract the property tax of 200 TND. The taxable real estate income is 7,200 minus 1,040 minus 200, which equals 5,560 TND.
Now we move to step 2. calculate the overall taxable income. We sum the net incomes from salary, non-commercial profits, and real estate. Note that the commercial profit from the clothing business is not included in this sum in the document, so we will follow the numbers given. The total is 38,644 plus 16,000 plus 5,560, which equals 60,204 TND. From this, we subtract common deductions. As head of family, Mr. Ahmed receives 300 TND. For his 3 dependent children, Sami, the university student, gives a deduction of 1000 TND. Lina, who is a non-student under the age of 20, gives 100 TND. Youssef, the child with a disability, gives 2000 TND. The total family deduction is 300 plus 1000 plus 100 plus 2000, which equals 3400 TND. Then we add the life insurance premium of 1500 TND as a common deduction. Total common deductions are 3400 plus 1500, equaling 4900 TND. Subtracting 4,900 from 60,204 gives a net taxable income or tax base of 55,304 TND. This is the amount on which Mr. Ahmed will actually pay tax. Now, step 3, calculate the personal income tax using the progressive scale. The tax is calculated progressively on slices of the base. From 0 to 5,000 TND, the rate is 0%, so tax is 0 TND. From 5,000 to 10,000, the rate is 15% on the 5,000 difference, giving 750 TND. From 10,000 to 20,000, the rate is 25% on 10,000, giving 2,500 TND. From 20,000 to 30,000, the rate is 30% on 10,000, giving 3,000 TND. From 30,000 to 40,000, the rate is 33% on 10,000, giving 3,300 TND. From 40,000 to 50,000, the rate is 36% on 10,000, giving 3,600 TND. Finally, from 50,000 to 55,304, the rate is 38% on 5,304, giving 2,015.52 TND. Adding all these amounts gives a total PIT due of 15,165.52 TND. However, we are not finished. Step 4 is the minimum tax check. The law states that the PIT cannot be lower than 2 thresholds. First, 45% of the PIT before the deduction of the life insurance premium. Second, 0.2% of the sales revenue, including VAT for the industrial, commercial, and non-commercial activities. We calculate the 0.2% minimum first. Gross commercial revenue is 80,000 TND, and gross non-commercial revenue is 20,000 TND, for a total of 100,000 TND. 0.2% of 100,000 is 200 TND. That is far lower than our calculated PIT, so this threshold does not apply. Next, we calculate 45% of the PIT before the life insurance deduction. To do that, we need to recompute the PIT without deducting the life insurance premium. That means the tax base would be higher. The document shows a recalculated tax on a base of 56,804 TND, which gives a PIT of 15,735.52 TND. Then 45% of that is 7,080.98 TND. Our calculated PIT of 15,165.52 TND is higher than both minimums. Therefore, the PIT payable remains 15,165.52 TND. Finally, we add the Social Solidarity Contribution, or CSS. The rate is 0.5% of the net taxable income, 55,304, multiplied by 0.5% equals 276.52 TND.
In conclusion, after calculating all 4 income categories, applying family and life insurance deductions, running the progressive tax calculation, checking the minimum tax, and adding the social solidarity contribution and the flat regime tax, Mr. Ahmed must pay 17,942.04 dinars to the tax authorities for the year 2025. This case study clearly shows how each type of income is treated differently before they all come together in the final tax bill. Thank you for your attention and take care.